Markets flirt with highs of the year as traders still grapple with negative news from the Eurozone. The ADP report this morning could give clues to what will be a very important jobs number on Friday. Facebook is finally planning its roadshow as the official date for the IPO has been set for May 18th. I'm Taylor Schrantz, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Stephanie Link, Director of Research and VP of Strategy at TheStreet. And together we bring you Morning Call Express.
So Stephanie, everyone on TV was saying sell in May, go in May. You know, that the second quarter is always bad. Sell, buy back the third quarter. To me, it looked a bit constructive. What did you make of the action?
Well, I think that there are a lot of cross currents going on right now. I think that you had very good earnings and appropriately so conservative guidance, enough to give the market a little bit of juice. But then now you have the fears of the macro. And remember the last 2 years, Scott, May was the beginning of a down leg, right? So I think you have these cross currents. I think that, in my view, you know, you want to get a little bit more, maybe a little more defensive or a little more balanced in your portfolio. We have a little bit more cash on hand than we normally do, and we'll look to buy on weakness, but we want to have that cushion in the short term.
And I think what you said, which is key, is balance.
Yeah.
You just don't want to be in one sector. You want to follow the money. You want to sell excitement. You want to buy dips. And if you look at the indices yesterday, they've been almost like passing the baton around. Yesterday, if you look at the chart of the Dow Jones, which I'll show you the DIA, it made new highs. Okay, it crossed above the highs, which is healthy for the overall market. If you bought this dip, you got paid, you maneuvered really well. One of the concerning signs for just say traders is we like to see the market led by tech or maybe even the S&P, which the S&P diverged a bit. Didn't make new highs, so it's showing you that people are trying to be a little bit more defensive. They're looking for more quality, because you also go to the Qs and you will see that it's well off the highs. It actually had a mini reversal yesterday with the weakness in Apple. It's off the highs here, so all in all, it's not a perfect tape, but if you stock pick and you look for quality and you look at the great earnings, I think you could still perform really well, and I think you've done a great job picking those diamonds in the rough. Not even diamonds, because everyone knows them, you just have to trade them well, and you've talked about entering them very well. What are some of those names?
Right, so like, if you look at earnings season, as we said, you know, they've been really good, right? But I think the one that surprised me the most actually was Coke. It's a great company, but they continue to consistently deliver. Now, this is not a name that I would buy right here, Scott, and I would love to get your interpretation from a chart basis, but it is one that I think, should it pull back, is when you want to add to your portfolio. They beat on volumes, and they got pricing, and in the face of significant commodity cost headwinds, and all the other staple companies are having a hard time. These guys didn't, so I like this one.
And you know what? It's been actually tradable besides investing. You can invest in this one and you can actually market time. When I looked at this chart, I'm like, this looks like a tech stock almost with the type of moves that it has. If you look here at the chart, you will see you could have bought this on a nice methodical breakout right above this level, which was around 70. Had a nice move, then it tightened up again. You know how we love tight charts, and then pow. Nice breakout move, and it's still holding higher. So if you held this and traded this, you're making money. You don't have to worry about what's going on in Europe right now because you did your job. So I would say if you see a pullback down to maybe the 74 area, that's probably a good area to get in. And I don't even think you'll see the 50-day again this year. So you're gonna have to actually, you know, be real tight and get in this quickly, or just stay with it. And it just, you know, it's these type of names that are supporting the move in the markets. So when traders are like, oh, Apple's down, market's up, what's going on here? It's these quality names that are leading the way.
And that's what I meant by getting a little more defensive. You do want to focus a little bit more on the quality names, the blue chip names. And so the second one that I kind of wanted to call out, another one I wouldn't buy right here, but I like, was American Express. Everyone was worried that they were spending too much. They were making a lot of money, but they were also putting a lot of it into the business. And they actually had operating leverage for the first time this quarter, and I thought that was just, to me, spot on, exactly what I wanted to hear. And I think the valuation is still very reasonable, but wait for a pullback too.
Exactly. And I remember you had it like 2 months ago. You're on the show and you said American Express, and I'm like, I love MasterCard, I love Visa, which were the traders, you know, vehicles that we use. But American Express proved to be another one of those vehicles, and you could actually time it here. If you go to the chart, you'll see this is when it was basing. This is when you could be in your tier one. Then look what happens when it breaks out. That's when you add for cash flow, and you had a nice move. So, you know, you saw Coca-Cola, you see American Express. You're seeing a lot of quality names that are investment quality that you could own, and you don't have to worry about everything that's going on, every negative headline. You just have to approach the market like a plan. Now, I know yesterday, you know, Apple failed again.
Yeah.
You know, to me, I'm not just trying to be a buyer of Apple. I think I'm going to let it sift out. I said, I know you own a little bit of it. You've been trading around it. What's your thoughts on Apple?
I like it. Clearly, you know, it's had a heck of a move. I mean, it's hard to, you know, put new money in when it's up so much, but I do like the product cycle story very much, and I do think we have a lot to look forward to in terms of iPhone 5 and iTV and Mac refresh, and valuation still looks okay to me. The derivative call, I would be buying Broadcom on the weakness today. They reported it was a very good quarter, but it ran 30% into the print. So I think you take a look, pick your spots carefully, but the valuations still make sense.
And I agree. And for a fundamental investor, you could buy on weakness, and then as a technical trader, you add when it goes in motion, combine both worlds, and you can do very well. And we're going to go more into this in the long-form version, so stay tuned.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.